Okay, so let's talk about the different types of structure, SMB and ISP. Or yeah. Okay, so what do we have? We have three different types of structure. We have, where's the anchored? We got swing, institution, and sub, right? And we have SMB, we have ISPs, okay?
Yep.
So can someone tell me characteristics of substructure?
It's like the smallest structure in the like.
Mm-hmm.
I mean, does it have a
break
characteristic?
anything. Oh,
It doesn't break anything. It doesn't sweep.
Yeah, so like it
Doesn't
could
feel
break
like we-
something. It can't break anything significant. So
Yeah.
substructure does not affect your bias in any way whatsoever. Okay, so for example, let's say we have this, right? So you have ISP down here. We have or let's do this way. Okay, hold on. So let's say we have here. So this is like you got an SMB, you have an ISP here, and then this would be substructure, right? So like what's going on in here does not matter. Like we can go any which way. This is not going to change our bias, right? I can start coming down, right? This is all sub, right? This doesn't change the bias. The bias is still this low is protected and this high is weak. And then when we get like an ISP again, then we can assume that this is low, right? But this is all substructure until basically you're proven otherwise, right? But something important to note is that like it's our job to predict when a new ISP is forming so that we can kind of predict that reversal. Of course, you can wait for confirmations, right? Such as like an order flow shift or a lower time frame SMB, right? But yeah, it doesn't matter what happens in here. The bias is still to take out this high and that this low is protected, right? So if you know anything about like expectation, it's we put in a new high, excuse me, put in a new high, come into discount, and then, you know, continue up, right? So substructure has no effect on bias, okay? Does not sweep, does not break important structure. Okay, so what is an important structure level? That would be like basically your weak high or your protected low or your strong low in like an uptrend. So if we actually come, so this is what I think Bobbin asked me yesterday. But you know, if we have this leg here and then we continue up, like this is all part of the same leg until a new ISP is produced. So let's just delete some of this. Clear this up. This is messy. 1 second. Okay. So let's just assume that we have an SMB here. And then we just continue like this. This is all part of the same leg. And we have to assume that it's the same leg until we come down and then we potentially form a new ISP, right? Then when this happens, right? So like we've taken liquidity out of the market, you know, we've had like that lower time frame or flow shift or like that fractal reversal. Then we can assume that our leg is complete and it's from here to here, right? So then we can assume that this is the institutional structure leg. Right. So anything that's happening inside of this leg that is just a result of the initial ISP and isn't potentially a new ISP that's forming is just substructure. Okay. It doesn't have any effect in price. This can bounce around in here. It really doesn't matter, right?
Yep.
Yeah. So that's the main thing to focus on. So that's what you have to ask yourself. Does it affect my bias? If it doesn't affect your bias, it's likely just substructure. Yeah, so let's move to the next one. So what is institutional structure?
It's a structure where it takes liquidity and breaks structure or fills imbalance. It's like an internal structure to the swing structure.
Yeah, so it takes liquidity to break structure
or fills
and
imbalance.
fills imbalance. Okay. So it's actually what it is the leg caused by ISP, that's egg structure, right? So it's the resulting leg that's caused by the ISP, right? So again, we have an ISP here. Let's say this is like an area of liquidity. This leg that develops is the institutional structure leg, right? It's a result of this happening. Okay. Does that make sense?
Yep.
So just because we have to differentiate the difference between like an institutional structure leg and an ISP. You're never really going to say this institutional structure leg, like we're not going to say it very much because I mean, that's not what we're focused on. It's just something to wrap your head around to gain context of like the leg that we're trading in, right? But really what we're most of the time going to be referring to is the ISP. And then I expect that you guys can understand that the leg resulting is the institutional structure leg. Okay, and what's swing structure?
The high structure.
Highest high.
It's like a major structure.
Yeah, highest low, right? How does swing structure get confirmed? Like if you're lost in the chart, how can you confirm that it's swing structure?
I can't define that actually. I don't have a definition.
You can define that by going on daily and 4 hour, I mean the higher time frame.
Yeah, that's true.
Takes out multiple institutional points.
Well, yeah, technically, yeah, but that's not how we specifically charted out, but that's not, yeah, that's true. So there's actually a way though, if one of you guys caught it in the video that I was explaining to Bobbin, we can specify what is a swing structure leg or what's a swing structure point rather by being able to identify if there's in an uptrend. So let's say here we have a start of a downtrend, right? So if we have an ISP here, an ISP lower on the left and lower on the right, then this is instantly classified as swing. Okay. If we're reversing to an uptrend, if we have an ISP to the left, ISP in the middle, ISP on the right, so higher ones on the left and the right, then this is instantly classified as swing. Okay. Generally, like most of the time, it's just the highest point and the highest low. It just happens to be that way. But if you're ever confused in price, you apply this method here, and then you'll be able to determine what swing structure is and what, swing structure isn't, right?
Oh yeah. I usually used to see it like if a low like has a flip zone and an extreme on a daily, then it's like a swing for me. I used to take it that way.
Well, we'll get into it because sometimes what'll happen, right, is that legs will develop in a unique way, right? So for example, you'll have like slow rangy price at the start, and then you'll have like an impulse, right? And then you'll have like slow range in the start that accumulates or reaccumulates for some time, and then like an impulse, right? So it would be silly to assume that, price up here that's from a month ago is part of the same swing leg. But if you apply this methodology, then you might find that your swing leg is actually all the way down here, right? And then when you actually break that level, then you can have that long-term bullish bias, right? Without having to wait another month for it to come back up here just for you to be wrong, right?
Yeah, true.
Yeah. So in a, let's say swing. So swing high equals ISP lower ISP on left and right. Swing low, higher ISP on left and right. So I'm going to put out like 2-minute videos on the Kajabi that basically explain all this, right? And I can give you guys a diagram as well. But I do expect that you guys should be making your own diagrams too. So you know what? I'll assign it for homework actually, because this is the type of stuff that actually makes it stick, right? Then at the end of it, I'll post mine.
Okay.
Okay. So what is an SMB?
Oh,
Or let's actually go. What is an ISP first?
Wait, we already defined that.
Well, we did. We defined what institutional structure point is. I mean, sorry, what institutional structure is. So what is an ISP?
Isn't it the same definition? The same-
Institutional structure point,
Yeah.
Yeah.
right?
the same thing.
So it's that, what is it? The comes from an SMB that breaks.
So like, how do we define what exactly an ISP is? Like, how does it form, right? So like, yeah, we've already answered the question, but still, for the sake of it.
Yeah, it sweeps liquidity, break structure, fills an imbalance,
Point that sweeps
sweeps liquidity.
rebalances or rebalances and breaks structure,
Structure.
right? Okay, what is an SMB?
It's a
What
break
happened?
caused by another ISP.
Smart
Everyone
money
agree?
break.
What's that?
Smart money break.
Yeah, smart money
Yeah.
break. What is it defined as? Or what are the characteristics?
The change
So
of
you
trend.
define,
Yeah, it is a change of
yeah.
it is a change in
When-
trend. How do we
It's a
mark
break
it
of-
on the chart?
With the green dot.
No, but like what are the like how do we know that it's an SMB?
Because ISP breaks another ISP in the leg, and that's how we define the.
Yeah, okay, cool. So we
SMB.
got so we have everything. Everybody's we got a good idea of what everything is. So just quick recap. So let's say we have this, so you have ISP, and then you would have something like, let's say this. Right, so let's say we have an ISP here, assuming that this is a downtrend. And then we've taken liquidity out of the market. That gives us a new ISP. That ISP is confirmed when we break structure, right? So there you go, it's an SMB. So an SMB is when ISP is overruled by another ISP in the
Another
opposite
ISP.
direction, right? So that signals a change in bias,
Trend.
right? So if we understand that an ISP is signaling that smart money is involved, right? Because we are in an area of liquidity, and then smart money gets involved in an area of liquidity on the opposite side and then takes out their own positions, then it's only logical to assume that they're no longer in these positions and they're now in the positions that are taking control, right? So this is basically supply and demand, right? In essence, but this is more logical because there's liquidity attached to it. So is everybody following here, or is there any questions?
Yeah, I have no
I
questions.
think we're all. Oh,
Let's go to 4 hour. Let's just pick a random point in price. Yeah. Okay, so the first thing that we're gonna do is I like to start from either the highest point or the lowest point of the leg. Just to, because we understand that this is most likely swing points, right? And then I'll just start to map out institutional structure. So when I'm doing this, I'm not mapping out substructure per se. I map out institutional structure first, go over it again. Then if you want, you can map out sub, and then I'll map out swing. Okay. So
Yeah.
we understand that you have, lowest point. We have highest point, right? So this is likely swing structure. We can confirm that when we look at the ISPs, which we'll do in a bit. But let's just try and figure out like where we've had SMBs now. So the first thing I'll do is try and figure out what the last ISP is going into this reversal point. Let's see here. So we have had a low, we've had a small take on liquidity here. All right, so we can sweep, take on liquidity, breaks down. This one fills imbalance as well. So you can see we've had, zoom into here. Imbalance, break structure, and then a third candle. So you have 1, 2, and then the third candle, and then you have that gap in the middle. Comes up, fills that imbalance, and then pushes down and goes on to break structure, right? So this
Yeah.
is actually your most
Alright, I
recent
see.
ISP so far, right? So you have one here, you have one here, and then we just follow again. See, there's no imbalance in any of these candles. So this is the most recent ISP. Nothing from this point. So this would be the high. This would be the low. From here, nothing breaks this level of structure. So this is all classified as substructure. Okay. Substructure has no effect on your bias on that time frame, at least. Okay. This may have significance on a lower time frame, but as of right now, this is not significant for our 4-hour institutional bias. Okay. So we break above here. Now, this may or may not be an SMB. The first thing that we have to do is we have to understand that ISP has failed. We ask ourselves what caused it, right? So we have to ask ourselves, did another ISP cause this one to fail? So does anybody see one that is a result of it? Do you want to mark it out?
Give me a second.
Yeah, so that's the most recent one. So let's take it back a step here. So we have your break of structure here, right? This break of structure here is a liquidity grab. Like we've taken liquidity out of the market, 1, 2, 3 lows, right? So I can mark this out as liquidity. From here, we've had a little bit of a reversal. So this is an ISP in and of itself, but what we're looking for is the most recent one. So let's go ahead and price. As we've pushed down here, we've grabbed liquidity from the market and then pushed up to take out this one. So this is the most recent ISP. Okay. So we can assume that this is our leg from here to here. So this is all continuation. This is substructure, doesn't matter. We hit up to here. See, we've broken below here. This doesn't matter. This is substructure, right? And then as we push down, we can assume that this low is protected because we've now had that SMB. Now let's follow in price. So we have another breaker structure. So now we have to look at this and say, where is the next ISP? So is there an ISP that caused this breaker structure here?
There is.
There isn't, or there is? Yeah, okay. Right there, right?
Yeah.
So now we have to try and determine where is the end of this leg, okay? So does someone want to follow price and try and determine that?
I can do it.
Sure.
So this leg goes, should I mark substructure or like just?
You can follow substructure if you want, yeah, whatever helps you to think.
Like, let's say we started like from down here. So we create like this side. So this is all sub. And then there is, and now this is like a bit confusing, but I would say that this is like substructure also.
Yep.
And then there is like, again, breaking the substructure high.
Yep.
And then I would say that this is where is our like end of the leg, because there is an imbalance here. And then there is liquidity below it, and we just take it out and break the structure above.
Right. Okay, so this is definitely an ISP, right? So we've actually come in, we've taken liquidity. We've filled imbalance, and then we've broke structure, right? So this is 100% an ISP. But there's something important here, is that we've actually had more in this leg, okay? And this is how we track order flow, is by following ISPs, okay? So there's actually multiple in here. And we're going to break that down now. So there's 2 types of ISPs. Let's go back here. Where is that? Types of ISPs. There's ISP type 1, ISP type 2. So ISP type 1 is a liquidity grab that breaks structure, that boss. And the second one, of course, is rebalance that boss, right? Okay, so understanding this, now we can follow and look for these rebalances in here and track order flow this way. So do we see any in here?
Nope. Only here.
Okay, this is one, yeah. There is one below though.
That's
Yeah.
Where?
I'm
Hmm.
assuming that this is the
This one,
the
does
wrong-
it? Do you count do you count this as a sweep? Wait, let me.
No,
Where is it? Where is the other one you're talking about?
right? So we've had push out, one candle,
Oh, I
two
didn't
candle,
see.
three candle.
Yep.
This breaks a little bit of sub, right? And then we've now rebalanced and pushed up, right? So this is another ISP, okay?
Yep.
This ISP, of course, holds, right? And because we're targeting, you know, some sort of liquidity above, and we can figure that out in the future when we track order flow. But yeah, so this is ISP. This is the next ISP, right? And then let's see if we can see anything else. We have another rebalance in here, right? So we're going to look at that lowest point, that break structure. And this is what I was talking about, how markets develop at different rates, right? So this impulse leg, price is already gone. If you're waiting to come into the discount of this leg, you're going to be waiting forever, right? Because
For a
you have
year.
this big impulse and it never comes back to you, right? And then it starts to chop, not chop, but it starts to have more of a healthy, efficient trend than this impulse. And it never really comes back there until, let's see, when did it leave this range? It left the range here and it comes back to it 35 days later, right? So being able to do this allows you to take trades as the leg develops and not waiting for it to come all the way back to you, right? Okay,
Yep.
so we have a rebalance here. We have nothing in here. We have, now we've created a new FEG here. Still nothing. All substructure, pushes down, and then we start to reverse, okay? So this becomes our leg from here to here, right? Then as we
Okay.
But what about this one that sweeps liquidity in the middle? This one doesn't sweep this like this low. Doesn't count as a sweep.
Yeah, you're actually right. So this can be viewed as well as
Because
institutional.
yeah, because it broke the high and
This fits the rules. So you have pushes up, breaks the high, pushes down, sweeps, and then continues, right? So
Yep.
actually, you're right. We're looking at this leg, right? And
then
then
this one by the way, this one like filled in an imbalance, then came back to broke it. This one right here. There's this imbalance.
yeah, so this we're gonna focus on quite a bit in when we're talking about order
Yeah,
flow as well.
liquidity. Yeah,
Yeah.
liquidity inducement.
Because
yeah.
you can see, of course, we've broken here. And to the left, we've come into an area of higher time frame liquidity, which means that some of these levels will start to fail as we have a deeper pullback. But that's something we'll get into when we get into that liquidity concepts and all that. But something to note here is that this whole leg from here to here is just one imbalance, right? It's two impulsive candles. If I go up a time frame, let's say, I don't know, 7 hour or something, let's do the replay bar tool. Right, you can see it's just one big imbalance, right?
Makes sense.
So it's just one push. Yes, there's a tiny little pause on the market just because it's the opening hours of the new 4-hour candle, but this all one imbalance.
But could you say something like that with like, see these 3 candles in the middle here, like any row of same directional candles?
Yeah,
Could
no,
be
you can, yeah. I would really suggest it if you're trying to, like in a case like this, are you guessing like, okay, yes, we've mitigated now and we've broken up, right? So we've come into this imbalance, we've filled in this first candle and broken up, but you have to understand that if it comes below here, is this still a valid trade idea, right? Like, did we actually shift? Like, this arguably is part of the same imbalance, so we can easily come lower into this and still be on the right side of the market. Now, when we come below this, then things get a little tricky, right? Because now we've taken out this whole imbalance, we've taken out the structural level, right?
Yep.
Okay.
Like you can in the next lessons you can combine like inducement and liquidity too. It will
100%,
make sense. It will make sense in the upcoming lessons. Yeah.
For sure. Okay, so let's just continue on here. Okay, let's follow it. Also, we could just start marking out these like with the premium discounts, right? So this is just tracking the legs that you're trading in. This one doesn't really have one. This ISP doesn't really have one because this is just continuing order flow. I guess you have this little leg right here, right? We push down into the discount and then continued, right? From here, we've now swept, correct?
Yes. We broke to the upside. We
We
swept.
swept,
So
we
that's
filled
good.
in balance. So this is both. Generally, what you'll find, mind you, is we have two types of ISPs. We have ISP type 1 and ISP type 2. If we come into like a higher time frame area of liquidity and we can expect a deeper pullback, a lot of the times type 2 will not hold and type 1 will be where you want to trade from. Okay, just general rule of thumb, and we'll get into that as well when we get more into like supply and demand and liquidity concepts. Okay, we pushed up, we've broken. Breaker structure, we have a little break here. We've broken. What caused this breaker structure? When the high of an institutional leg breaks, we always want to ask ourselves what caused it, right? Because we're looking to track the next ISP. So what caused this one? This ISP, right? If nothing, if we ask ourselves that question of what caused ISP institute, or we'll just call it an ISP leg to boss. What caused ISP leg to boss? Right. So this is what we have to ask ourselves. If we can't answer that question, then it's substructure. Right. The answer we're looking for is another ISP. Did another ISP cause it or sub? Right. Those are the only two answers all the time. There's never any other answer. So it's either an ISP caused it or a sub break caused it. And if sub, then it's all part of the same leg, right? So let's go back to, where did we see? Okay, for example, this. We've pushed up, pushed down, broke. You may assume that this is an ISP in the real time, right? And you would have potentially gotten a good trade in here, right? But in this case, it broke, right? Markets aren't, my trading plan isn't 100% accurate. That's impossible. But you understand that this is just considered sub, right? Especially at this point, right? We've broken through it. We've now created a new ISP. This is substructure. When this break happens, we ask ourselves, okay, what caused this break? We push down, push up. This is just all sub, right? And we can see that in hindsight, of course. In live market, you might not be able to see that, but generally that's the case. So another example would be here. We push up, push down, created a high. We've broke that high. We ask, okay, what caused this to break? We look back, nothing of significance, no fill of imbalance. There's no sweep. So this is just sub, right? So then we just assume that this is all one leg. Is that making sense?
Yep.
Okay. Do we see the next one? Brian.
Okay, so what are we looking for?
Is that Brian talking?
Yeah.
Okay. So we're looking for the next ISP, right? So currently the leg that we're in is this one, and we're looking for the next ISP.
Okay.
Okay. So let's
So
follow that
up here.
train of thought. Sorry. Let's follow that train of thought of, following, what broke and then what caused that break.
Yeah. So this one caused, where's my friggin' annotate here? What's happening? It's not letting me draw with the mouse.
Is it saying you don't have permission?
No, I was drawing earlier. Let me close it and then hit the pencil again. There you go.
Okay. Right. So that's correct. But where's the sweep that caused it? Yeah. Okay. Perfect. You got it. Right. So you have this leg to here. The sweep, of course, is, right here. Right.
Yeah.
Where's liquidity? Okay. And that broke it. And now from here, where's the next leg?
Be down here and then
Yeah, exactly.
am I locked up? Can you hear me?
Yeah, I can hear you.
Yeah, okay.
Yeah. So you got that right. So you have ISP
Guys,
here,
sometimes
you
it
have,
happens.
this
Drop
one comes back, corrects imbalance, you have ISP here.
What
There is a
about what
little,
about this one?
Yeah.
This one.
yeah, so there is a little one here as well. So this is technically still an ISP. I mean, sorry, an ISP, right? And then we can push up. So when I see this type of thing, this is where we come into type 1 and type 2, right? So here's type 1 all the way down here. This is type 2. Okay, if we came into a higher area, time frame area of liquidity, we might expect that this won't hold, and this one is another type 1 as well, or type 2, which is a rebalance. We expect that this won't hold, but we can expect reactions from the ones that sweep. Okay,
Yep.
so if I just skip ahead, right? Because the general idea here is that this gives us a healthy POI to trade from, right? We see clear move in the market that gives us that reversal, right? And then these are continuations. ISP type 2s, which are the fills of imbalance, are continuations as the leg develops, whereas ISP type 1s are the start of the larger leg. Okay, does that make sense?
Yes.
I know
Question,
this is-
Cash.
Yeah, what's up?
This one here, this ISP was caused because of this imbalance.
Yeah,
Is that why? Okay, understood.
yeah. So we have this imbalance in the leg, right? And then we're looking for the tap in, that break structure. Okay. And when I talk about break of structure, when I'm following order flow on these higher time frames, I'm looking for body candle closes. Okay. I'm not looking for little taps of wicks. Just to be clear. Right. I mean, here technically, okay. Well, yeah. Here the break actually happens over here, right? So not here. So you have this break, pushes down, and this is the most recent one, right? So we're looking at body candle closes, which is all the way down is the same. Okay. Okay, so we have a break of an ISP here. So what do we have to ask ourselves? When an ISP fails, what do we have to ask ourselves?
What caused it?
What caused that? Yeah.
What caused ISP to fail, right? So this is all you have to constantly ask yourself. Okay, so let's look back. Okay, where did the ISP fail? Right here. Okay, let's look back and see what caused it to fail. So nothing clear here, right? Well, yeah, we have that one. But let's see up at the top. So we've had clearly a push into higher time frame demand. So we can just call this higher time frame POI, right? So higher time frame POI or higher time frame liquidity. This is HDF lick. Okay, so let's make this red. Okay, so higher time frame liquidity to left caused it. We push down. Now we're looking for the most recent one that broke it, which Yas pointed out right here. Right? We understand why. What type is this?
Type 2.
Type 2, right? So we have a rebalance. Rebalanced liquidity, or we rebalanced the imbalance, pushed down, broke structure. We've then broke sub, for example, right? And then we've broken the other ISP, and this gives us the SMB. Okay, now what happens that we've had an SMB? What is the signal to us?
We're bearish.
The
Change of
shifted the structure. Yeah.
trend.
Yeah, so now we have bearish bias, right? So just because this little, for example, this little break happens here, doesn't mean that we're instantly bearish, right? And you may be taking trades from here, right? Now, in the context of the fact, you know, we've come into higher time frame liquidity, it'd probably not be the best idea, but based solely on structure, this is valid to trade from. This is valid to trade from. So let's see what happens now. Remember what I said about type 2 and type 1. Type 2 will get a good reaction, right? So let's just see. This may not be the case now, but generally it is. Okay, so this one just runs through, and that's fine. Either way, you wouldn't be taking a trade from this level because we are trading with ISPs, right? We're trading SMB broke down, so we're bearish, right? So you wouldn't be trading from this level, but technically what you could have done is waited for some fractal reversal and then taken a trade. Okay. I don't want to throw too much in this video right now because I'll confuse the shit out of you guys. Okay, so we have this leg what is the next one?
It's right here.
What type is that one?
It's
Type
type
1
1.
sweeps liquidity.
Okay, where's the liquidity?
Equal highs.
Is that, do we come above there?
And this one filled in an imbalance, but like it didn't do anything. So
Yeah, it doesn't break structure, so it doesn't really matter, right?
yep.
Okay, so we actually come up above there by a little bit, so we'll just mark this one out. Okay. So we actually do come up above this just a tiny bit, and then we push down. Okay, so let's try and figure out now, where does this end? Okay, where's the next one? So where does this leg end? Right, so we have this is the ISP. Where does this leg end?
It's right here.
Everyone agree or disagree?
Yes, sir.
You don't sound too confident there.
No, it is.
Okay, why is this the end?
Because like the next bullback sweeps liquidity and breaks
Yeah.
structure. So it's
Yeah.
like here. Yeah. Oh, what a terrible drawing.
Yeah, okay. Cool. So we've filled in this whole imbalance here, right? And then we've pushed down. Yeah, that's it. So
You gotta be kidding me. I missed all these moves because of
Yep.
that.
everything. Because this is tracking order flow, which is why it's a
Yeah.
complicated way of viewing structure. Versus just simple higher, 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 low. But what this allows you to do is actually get involved with all these moves as they're happening, instead of
Yep.
just instead of this, right? Mark out
Waiting.
higher time frame POI and wait 6 months for it to come to you,
Exactly.
right?
For inducement to
Yeah, and then you have to wait for inducement to build up on the 4 hour, and then literally that can take you a month.
I have a question, like
Sure.
here, maybe we're gonna do that later in mentorship, but like I see also this imbalance here, which doesn't get filled. How am I supposed to know if I should pick this one or this one?
Okay, so that's a good question. Hold on. So that the first thing, right, is that it's paired with like daily order flow and stuff like that. You're gonna build like a confluence around it, with supply and demand, daily order flow, multi-time frame structure analysis, like what we're doing right now. That'll help you. And sometimes it's just not that clear, right? Like this is all one imbalance. We may not know how high it's going to come up into here, but what we can do, and is part of the trading plan, is we understand that we're in this area. We can start to look on lower timeframes for that fractal sort of reversal, and then try and get in. But like, we don't know, is this news? Is this not news? I have no idea. It's at, what is that? Let's see.
It looks like
Yeah, so like this is probably news, right? So you might not even have gotten involved here. This is probably FOMC, considering it's at 2:30, right? So you probably just wouldn't be able to get involved in here.
Mhm.
But when it's not news related, it's generally pretty clear. But the rule of thumb is, when in doubt, just wait, because it always gets clear.
And I have one more question, like, let's say we are marking IBS on higher time frame, but
Yep.
like, are we marking also, I mean, not IBS, ISP. Are we marking also ISP on lower time frame? Like I see from here, like the taking out the liquidity and then starting creating like higher highs and higher lows over here. So
For
are
sure.
we waiting for that break on a lower time frame so we can get involved into the trade?
Yeah, for sure. So you can even potentially take longs in here if, we're coming from a higher time frame area. So all of the trades in the mentorship are taught to build from the higher time frame and medium time frame, and then you only execute on the lower time frame. So if you can't build the trade idea from the higher time frame and medium time frame, then you don't have a trade idea.
Okay.
The thing is that, and this is what you're gonna do a lot in your testing, is that it's the reason I call it higher time frame, medium time frame, lower time frame, and not daily 4 hour, 15-minute, is because it's interchangeable, right? You pick your 3 time frames, and that's in the context of your trade idea. For example, the higher time frame in this case could be the 4 hour. Then I can go into I can base the 15-minute off as my medium time frame. See if something happened in here, like having this ISB, and then potentially taking along in here and like scalping the market, right? So it's interchangeable. Not that there's a trade idea in there, but
Mhm.
yeah. Generally, you pick your timeframes that you want to use though. So 4 hour, 1 hour, for example, or daily 1 hour and 15 minute, right?
Yeah.
Right. So do we see where's the bottom of the leg? Is the leg complete yet, or are we still continuing?
I think
Yes.
that, yeah, the leg is complete.
Okay. But have we created another ISP yet, or a potential ISP?
I don't think so yet. We did not.
That's not quite.
Okay, so let's mark out where is imbalance in the leg, right? So we have this one, we have this one. Okay. So let's just see what happens without trying to predict anything. Okay, so this one obviously is not it. We're coming into to the left. Okay. And are we breaking the high here? Look for that body close.
Yeah.
Okay, so we've broken the high. So what do we have to ask ourselves?
What caused it?
Right, so what caused ISP to fail? Do we see any ISP down here?
Oh, sorry, this is the first one, but I would say here maybe.
100%. Perfect. Yeah. So this is fill of imbalance, correct?
Yes.
Yeah.
Right. And what type is that?
Type
Type
two.
2. Okay. So now we measure here to here. We wait for a sign of, pullback. Okay.
So this is all the sub, right?
Yeah, this is all sub, right?
You cannot
Oh.
say that this
We've pushed down
like
though.
rebalances.
Yeah,
breaks,
we've
and then-
rebalanced. Right. So we've rebalanced. And now we've pushed up. So what does that give us? ISP. And there's your break, right? So
Yeah.
this is our current leg. Okay, now we've pushed down. So again, we ask ourselves, what caused this to
caused
break?
it?
We look. Do we have an ISP?
I would say this small black candle maybe.
Yeah, fractally, sure. But of this overall leg, right? What are we reacting to
It's
the
a-
left? Right?
Yeah.
Come into an area like so, and then we've pushed out. So we have another SMB. And now we're back bearish again, right? And just like
Yeah.
I said earlier, type 1s, generally when we're having a larger pullback, type 1s, liquidity grabs tend to hold, rebalances tend to break, right? And you can see here, we've broken this one. This one that sweeps liquidity is holding, right?
Yeah.
Okay, so where's our leg from here to here? We didn't have a candle body break yet, so this is not valid just yet.
Oh, so you need to have like a body break
Yeah, ideally you
that's
want to
right.
see
Okay.
body breaks, right?
because it's like it counts as a displacement, right?
Yeah,
Oh, okay.
because you can't confirm that a wick is displacement, and not a liquidity grab. Whereas a candle body is confirming that it's not a liquidity grab.
Yeah.
Okay. And we've come up into here. How would you know, for example, that this is the one to look at and not this one? Well, you can see as price develops, it's building a bunch of liquidity below it, right? So that's where inducement comes in.
Yep.
All right. Big push up. Still no candle body break. And now we're just chopping around. Still nothing really of of interest. Again, right? We're still trading in this range, despite the fact that we've come out of it a bit. Okay, we have a break here. But immediate re-entry and still chopping around, right? So if this happens, there's really no point of us to sit here and try and analyze the market constantly and try and figure out what's going on, right? But let's see
Yep.
here. So we had bearish SMB. Push out again. This is just wiki nature. When we see a wick out like so, what we want to see is that we get a candle body closing above that highest wick, right? So for example, when we wicked out of it, we were looking at the lowest wick and we want to see a candle body close. Okay. Does that make sense?
Yeah.
Yeah.
Now I've pushed out, broken. Where's that low? From here to here. Oh, it's actually from here to here, right? We look up, where is the SMB or where is the ISP that caused it? We have a little sweep, liquidity, and you have SMB here, okay? And we're off. See anything?
Would you
So
say that this is breaking of a swing structure?
yeah, for sure. So let's go back now. Okay, so we get an idea of what ISP is, right? An institutional structure, right?
Yep.
You have a good idea?
Yes.
Yeah.
Okay,
Pretty
so
clear.
let's look at swing. Okay, so we have swing high here, and we can confirm that by, okay, we have a higher ISP to the right, and we have one to the left. So we have like a liquidity grab here, right? So we have this push up, this breaks down. So this is an ISP as well, right? So that gives us swing. Okay. If this is too much to weigh out, then all you really need to know is that highest high and highest low is swing. Okay. We have one here as well. What do we see? We see a higher one to the right. And then do we have a liquidity grab? This breaks. We have a higher one to the left. Right. So we have that sweep, the little break that gives us a little ISP here. And then that gives us that long-term swing point, right?
Mm-hmm.
So when we break that, we've got clear, break a swing. Where's
Last one. Oh wait, never mind. You don't have one.
this swing? Okay.
Hmm.
Now, of course, if we have a new swing low, we must have a swing high. So what do we have here? We've got ISP, ISP. Where's that point in the middle? Right there. This is your swing high, right?
Yeah.
So you have, and you have swing low here, right? This one. Okay, so swing, but this is what swing structure is doing, right? So we can still come down into here, but swing structure now is shifted bearish on internal structure, but overall the leg is from here to here, right? So we can confirm that we're in a pullback phase to then continue up. Everyone following?
Yeah.
Pretty easy.
Oh, it is?
Yeah, light work.
No, seriously though, ask questions if you guys are not following, because we'll hammer it down.
I don't have any questions.
Brian, you
Yeah, we're
okay?
good. Yeah.
All right.
Good.
Sick. Okay, cool. All right, so let's just follow it again. We'll do this for a few more minutes and then yeah. Okay, so you have ISP leg from here to here, right? So where does this end? And the new one begins. Okay, we're gonna rotate. All right, so I can Yas doesn't answer every single question. Okay. So yeah, we have this one, right? So this one like rebalances in this leg. And then as we follow along, we're always looking for the most recent one, correct? So this is where the break happens. We're looking for the most recent one. So what's the most recent one that broke this one? Yes.
Me? I'm not gonna answer. I
Okay.
answered too many questions.
Okay. All right. So Bobbin, you got that right, right? So
Yeah.
you guys are picking this up pretty quickly. Other people don't pick this up as quickly as you three, I have to say. But yeah, so we have this one that, sorry, fills in balance. It's not due supply and demand yet, but we fill in balance in this overall leg, and then there's like a little bit up in here as well, right? So this one fills in balance, pushes down, that gives us type 2, right?
Yeah.
You have clear liquidity across the tops. Okay. I'm not going to get into that yet, but just so you can see why that everything is laid out as it is, because overall as a whole picture, it works as a really good system. Okay. So we have this breakdown. Where does that break end? Where does this end? I love it when it's like this. This is good.
Yeah, it's on the last low.
Okay, Brian. Where does this whole leg? What is this leg? Is this one leg or is this 2 legs?
That's 2, I'd say. It comes up and fills this little thing here, and then comes back up.
Okay, fractally, yes, but because we have to follow body breaks, no, right? But let's look at this here. This whole down move.
Yeah,
Okay.
this one entire leg. This is the whole leg. We haven't like had a next leg yet.
You don't think so?
Unless I'm missing something. What am I missing? Tell me.
We need to see this thing get filled up.
No, it's just a tap in, right? This counts. This is an immediate rebalance.
Oh,
So-
okay,
Oh, I
okay.
guess that's
I didn't
very
know.
slight, yeah.
It is very slight, yeah.
Yeah.
But we've
I didn't
tapped
know it
in, and now
counts.
this is your immediate rebalance. Okay.
Okay.
Okay,
So this becomes your new structure leg. So you have this one, and you have this one.
So
Okay.
it doesn't matter how we tapped into in the
No,
imbalance,
no,
right?
no.
Okay,
It
okay.
just needs to tap in. Okay.
I thought it had to be like a deep tab or something.
No, it doesn't matter at all.
Okay. Got you.
Does it have to swipe previous candle or no?
Sorry.
Does it have to swipe the previous candle that it made, like here? I would say this is like swing candle, 3 candle formation, to consider it as a ISP.
Yeah, so it has to come into the imbalance, right? So what an FEG is 3 candle formation, right? So you have 1, then you have 2, which is your FEG, and then you have the 3rd candle. So it has to come above the 3rd candle, right? Above candle 3.
Yeah. That's okay.
So as long as it taps into this blocked out area, even just a couple pips, it doesn't matter. That still counts. Okay, and this is, yes, it's kind of difficult to apply, but it's mechanical as it gets, right? So there's no guessing game involved.
Yeah.
Okay, so we've broke now. What do we ask ourselves? What caused us to break? In this one, I don't see anything too significant. Like, yes, we have rebalanced this and then pushed up. So we could argue that that is where ISP happens, but in an event like this, I would have to have more context onto what's happening in price. Because this was rebalanced by this candle, and then it's
And it
no
didn't
longer
break.
an imbalance, right?
Yeah.
So this is completely filled, and then this pushes up, but this fails to break, right? And this pushes up. This is not really taking liquidity out of anything. I mean, there is a little bit above this high. For me personally, I would need more context. And in an event like this, I'd probably mark this out as ISP, but I would not trade it. Like, there's not enough information here for me. Okay, now this is a little more clear, right?
Yes.
So what do we see just happened?
Rebalance.
Okay, rebalance. Right. Because this is
Another
an
rebalance.
ISP. We can expect that this will hold. Right. Another rebalance. Things are starting to tighten up, which we can see in price. This probably means that we're in some sort of high value area. And we'll see what happens here. Okay, so oops. This. We have that break,
SMB.
SMB, push down. We start to reverse, right?
Yes.
Consistent. This is always happening. We have push down here, refills and balance. New SMB or ISP, sorry. This comes up. We've taken out liquidity above the high, potentially new one. Though we don't know where we're going yet, of course. So let's see liquidity.
Wait, did we break like the whole swing, the whole old swing, or we're still in the swing? Like the whole bullish swing.
Like, what do you mean?
Oh
Sorry.
yeah, we broke it. Yeah. I just
No,
wanted
this.
to see
Oh,
that.
this. Oh, the large one.
Yeah, the large
Yeah,
one. Yeah, we broke it, so we're bearish. We
Yeah,
can,
you're
like,
definitely confirmed bearish.
yeah.
Okay, so taking liquidity out. Again, remember, this is not a break of structure because it's still a wick. We would have to now come above this level here to break structure, right? Okay, now it's a break of structure. Okay.
Yeah.
So what caused this break of structure? You have to look for the next ISB. Can you point that out? Beautiful. Yes, you're answering all the questions, buddy.
I'm muting myself so I can answer it to myself.
Okay, so let's continue. All right. So again, when we're talking about ISPs, this should be protected in theory, and this should be weak. Okay, we broke. We have to ask ourselves what, Brian?
What caused it here? So would be this one here.
Perfect. Have a break here. Okay, and then what? What do we have? What else do we have? Is this an ISP? There's type 1
No.
and type 2. Does it fill imbalance or take liquidity, and does it break structure?
Yeah, I guess it fills some balance there.
Right. So we fill imbalance. It takes liquidity. I mean, this is a form of liquidity, right? So you got both.
Yeah.
And then we break structure, right?
Yes.
So going back to what I was saying about swing structure,
Yeah, we have an ISP on the left and the right.
a
So
lower
it's
one on the
our
left,
new-
a lower one on the right, and a higher one in the middle. What does that give us?
And our new swing.
New swing point, right?
Yeah.
Okay, so our long-term intention now is from here, and we can expect that we're going to push down and put in potentially a new longer time frame low, right? Or swing low. So we can expect that these ISPs will continue to hold for quite some time. Okay, so do we have another ISP here?
Yeah.
Right. So this one, that's a type 2. We have any other ones? Ooh.
I don't know, maybe this one, and then like here happened the break.
Yeah, so we do pull up here, but so this is good that we've seen this now. So we've pulled up, yes, and then we've pushed down, but then we've immediately pulled up. So there's really no high in here, right? Like when we want to see a high, you want to see a clear high in the middle, right? Those like we have a lower low on each side. Like this is a high, if a lower one and a lower one, right? This one is just a tap into the imbalance, and then it breaks through. This is still the imbalance to hold though, right? So we don't get an ISB here or anything, an ISP or SMB, my goodness, right? So we can expect that this one still holds and is in control, and you can see it does. Right, until we are proven wrong. Again, we're looking for that body break. Looking for that body break. Okay.
Yeah, it's not happening.
Not happening. Still looking for that body break. Okay, there we go. So we're looking for that body break from here. And does that count? Let's wait for the next one. Okay, there we go. Right. So you understand why that this is the break of structure and not this one?
Yeah.
Why is that?
Because it's a body break.
Yeah. Yes, bro.
Fuck, I'm sorry, man.
Okay, Bobbin, why is it?
Because there is no body break. Like
a
it
reaction
happens over
time.
here.
Yeah.
I mean,
Okay,
he's
so-
so fast. I cannot answer. Like I cannot compete with him.
I know he's got that young energy, bro.
Yeah.
Okay.
I have one question here.
Sure.
So does this make also the swing point, or like no? Over
This one
this
here?
candle.
Yeah, actually it does. So we have an ISP here, right? And we have one on the
Yeah.
left, of course, we have that sweep. So this becomes the new swing point. That's a good eye, man. Okay. So we've pushed down, and then after we've liquidated in here, we've just put the wick. The break of structure point, right? What I was trying to get across is not still here, but rather it moves down to that wick, right?
Mm-hmm.
So this is where the break of structure happens. Now we have to ask ourselves what caused the break of structure. This one, of course. And then we have something else lower or no?
I would say yes.
Where is that? Mark out the imbalance liquidity and 4 point.
So
Yeah,
imbalance here, then this, then also this got sweep. So it happened
Perfect.
here, and then again we have like sweep of the,
perfect.
I would say, liquidity, and then it happens down here.
Perfect, perfect. So the way that I would look at this is I see that you have had so many different ways of looking at this. What I generally stick to is the most obvious one, right? Because that brings clarity. And for me, that is the imbalance, right? So we've pulled up imbalance, and this is just a result of everything. This is like fractal
Okay.
stuff, right? So we want to
Mhm.
look at the time frame that we're focused on, which right now is the 4 hour, and what is this the narrative that's going on, right? The narrative is that we rebalanced and then fractally stuff happened, but that's not very important to us right now. What actually could have happened here is that after we've rebalanced and we can assume that an ISP is forming, right? We don't need to wait for the break of structure. Let's go back a bit. I'm going to throw in a little bit of sauce here. We're getting a little bit ahead of ourselves here, but we're going to do it anyways. So you know what you're looking forward to. Okay, so as we've tapped into here, we got a new potential ISP. Again, how are ISPs confirmed? Guys, Brian.
Yeah.
Huh?
I'm gapping. Oh my gap.
How is it
Yeah,
confirmed, the ISP? It's confirmed by so an SMB is the reversal, right? That's when an ISP breaks another ISP. But how is the
Yeah.
ISP confirmed? Like, how do we know we're in a new structure leg, for example? It's not a trick question.
Why am I know I'm drawing a complete blank now. I don't know how to fucking.
Yeah, that's
figure it
okay.
out.
That's okay.
It's
Okay,
not stuck in there hard enough.
Okay, yeah, for sure, for sure. So this ISP is unconfirmed until we've come down and broken structure, right?
Yeah.
Because we don't know for sure if this is just more sub that's in development. But when we do break structure, then it's confirmed, correct?
Right.
Right. So for example, let's just look at this one, right? So we have this leg, and then we have potential ISP, and then it's confirmed when we come and break this low, right? And now we know for sure that we're in a new leg, right? So in this one, are we confirmed that this is an ISP?
Nothing comes down and breaks yet. No.
Yeah, right. So nothing comes down and breaks. But we can assume that it's potentially an ISP that's forming, and how we could do that is by looking at it fractally. So we're on the 4 hour right now. I can jump down, for example, to the 1 hour and try and study price, or the 15-minute. And then we can say that we've tapped in. This could potentially be that where the ISP is formed. Then we'd look for our entry model to play out, which we're not quite there yet. But then we can look for the same thing to happen. Like, okay, is there ISPs forming on the 15-minute, right? So let's just get into this real quick without getting too into detail. Okay. So you have something like this, you have this break, right? And then you have FEG.
Balance,
right?
holy
And you
shit,
can-
what a beautiful entry.
Yeah, right. And then you can assume again, when is an ISP confirmed, Brian?
When it breaks.
Okay, but can we assume that an ISP is forming? Is that, can we predict?
Yes.
Yes, we can predict,
Yes.
right? And that's all we're doing as traders. We're constantly predicting, right? So, for example, when price comes down and pushes up into this FEG, we have liquidity as well. So just more confluences. We can try and predict that this is going to be the next ISP, right? And then we can like set a limit
Right.
on there, and then we can like cover this high, for example, and we could target the low, right? And of course, we can
Right.
target significantly more than that, and we can also refine, right? Like an 8.9 pip stop is still a little big, but or a 10 pip stop, but you know, yeah, and then we can target that low because the expectation is that the 4-hour institutional leg will come up. We've now fulfilled the need, and then we'll come break down, right? And this is what you call order flow. Okay, so in a 4-hour now, where do we manage? We can target this. We can also even potentially target this. And why can we target this?
Swing structure.
Because
Yep. So we have swing structure point, right? So let's just confirm that. Do we have lower on each side? Oops, sorry. So we have this little sweep in here that pushed us up. So this is an ISP, right? We have an ISP on the right, ISP on the left. That gives us long or swing structure point, pushes up. This level's weak. We could potentially target this. The minimum target is here, and then the maximum target is there, right? So there you go, right? So there's your profit. And that was with only entering on the 15-minute, just using structure. That wasn't really using anything else that we use, right? So that's a little sneak peek of how we enter and exit the markets, right?
The sauce.
What's that?
The sauce.
The sauce, right? Yeah. So it's really that simple. This is the
Yeah.
hardest part of the entire program and the entire trading plan, which is why I threw it right at the start. Because everything from here, if you guys grasp this, and it doesn't matter if you guys got to spend 2 weeks on it, a month on it, really doesn't matter. Spend all the time you need. But this is the most important thing of the whole trading plan. Okay, so we have like here, we'll do this for what time is it? 8:40. We'll do till 8:45 or 8:50. Okay, so you have this leg here. Has the leg ended yet? Oh, fuck me. What pair were we on? Oh, gee, okay.
yeah, I hate that. If you fucking hit Command or X or something, it takes you to a different
Bro,
screen.
Man, I hit the
Dumps
space
you
bar.
out of the rewind.
It's
Oh,
the worst.
Space bar, yeah, that happens all the time.
Yeah. Okay. So has this? Oh, fuck me, dude. Sorry. Oh man, because I'm using FX replay for backtesting, and you have to click Control Spacebar instead of Control Arrow or whatever. Okay. Or Shift Arrow. There we go. Okay. So we have that breakup swing, right? So we can mark that out. We have no body close yet, right? So it's not technically a breakup swing yet. Still not technically a breakup swing yet. But what do we see in here in this leg? Current leg we're in.
Rebalance, like
Beautiful. So we have a rebalance. And what does that give us? A potential.
potential
Nice.
sell zone.
Yeah, potential sell zone, potential ISP, same thing. Why is it only a potential ISP and not a confirmed ISP?
Because it didn't break the, I mean, below this week.
Yeah, exactly, right?
With
Because we
body
didn't
candle.
exit this range, right?
Yeah.
Okay, still not.
Still not.
Now what has to happen? Okay, let's go back. Let's take this back a bit. From here, what has to happen now to confirm this ISP?
It needs to go body closure below this candle.
Perfect. So this would be the next area that has to break to
Exactly.
start a new leg, right? Because we had a wick below and then we move it down to the most recent one. Okay. Pushed up.
And
This would have been sort of cutting you off. This would have been a beautiful trade to take and just take profit here, right?
yeah, I agree.
You guys can understand how the system's starting to work. What were you gonna say?
So ISP failed because we didn't have the body closure, and like now our leg is like from here to down here.
Yep, that's right.
So this is not confirmed the ISP.
It's not a confirmed ISP, correct? So we're still up into here. Okay, what happened now? Brian, what happened?
We broke this last ISP.
Okay, what do we have to ask ourselves?
What caused it?
Right, so where's that little thing? Mhm. Okay. Okay, it doesn't want to work. Whatever. All right, yeah. What caused this ISP to fail?
This break here,
What caused this break to happen now? Perfect. And what do you call that?
ISP,
Right? So when an ISP breaks another ISP, what do you get?
SMB,
Perfect. So you get a smart money break. And what is that signal?
change of trend.
Change of trend, right? Change of bias. That signals to us that smart money is no longer short and they're now starting to enter longs, right? This can
Right.
mean a multitude of things, right? This could mean that they've exited out of their short positions. This could mean that they're now accumulating long positions, right? Now, where's our swing structure point? Sorry, the long-term swing structure point.
Long term.
Yeah, like our
Just
swing. So
one
we have swing. We have so you have 1, 2,
3. Yes.
3 right here, right? This one's not confirmed though, because we haven't actually had that body closure, right? So again, this one
Right.
gets deleted. And now the swing structure leg is all the way up here, right?
Okay, so what, we'd have to break this swing to have another one down here?
So sorry, let me rephrase what I said there. So we have this swing structure, right? Swing structure point, right? And this one, right? So
Yeah.
let's just zoom out a bit and get you a better picture here. So we have this dot, 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 right? So what is the expectation in a downtrend is to come down below here, right?
Right.
The thing is we need a body closure, correct? We still haven't
Yeah.
gotten that body closure because this wick pierces in, then we move it down to here, right? Same process. And then there's no body closure, right? So this
Okay,
this swing point here that we had marked out as a potential swing point didn't break this structure. So we don't look at it. We're now looking at this as our swing high. Okay. Does that make sense?
Yeah.
Because this hasn't done its job. Yeah, I mean, it's still technically on there because this could be a fractal pullback, right? We can just do this and then break it, but we'll see what happens here. Okay, so do we see anything? What is our what is our current institutional lag, Brian?
from here to here.
Yeah, perfect. So we can put on our premium discount tool. Right. We push down below here to this ISP. You can see we have a reaction. This is the weak level. This is the protected level. We know that we're counter to swing trend, so this is a little bit risky, but still valid. Okay, we've pushed down. All right.
You could have got a trade like that, like 5 hours, 6 hours, possible.
From where?
Like if, like from here, because like there is confirmations on
For
the
sure.
15.
Yeah, no, for
Yeah.
sure. You could have, yeah. Okay, going back to what I said earlier about type 1 and type 2. What did I say about type 1 and type 2, Brian?
One takes liquidity
Yeah.
and the other one does not.
Yeah,
Or
the
it's
other one.
fucking- yeah, one rebalances.
Yeah.
So type 1 liquidity grab needs 2 is rebalance the break structure.
Right. Okay. So what did I say about let's say we've had an SMB now. What did I say about expecting reactions? Okay. So what tends to give us a reaction when price comes back to it? Is it the sweeping one or the one that is rebalance?
Sweeping one.
The sweeping one,
Liquidity,
correct.
we can expect that to hold.
Yeah, exactly. So what do we see right here? Right, we've ran through this one. We've ran through this one, or well, this one's not one, right? We've completely ran through this one and tapped into this one, right? And then we've had that push down, right?
Right.
So we've had that SMB, yes. So we could have taken longs in here, but the narrative is still intact to then potentially take sells, right? And this is a developed skill over time, right? So we've tapped into here, given us another ISP. and we've taken liquidity out of the market. This could potentially have been a trade idea to then take this. Of course, this is some sort of, it's probably again FOMC, but you know,
But there was an entry way before it on the 15th, before the news.
in here, yeah, most likely.
Yeah, there
Yeah.
was.
So Gio, this would now be the new swing. Oh, whoa.
Sorry, yeah.
That's all good. This one would now be the new swing.
Oh yeah, Christian. Sorry, bro. Fuck.
It's all good, man. It's all
All right.
good.
I'm gonna start asking you questions. Are you following, bro? How you doing?
Of course, yeah, dude. I'm good. I'm
Okay,
solid.
you got any questions or no?
I'm all good, man.
Okay, sweet. All right. So, okay, again, nothing really happening, right? All right. What do we see here? Bobbin.
The rebalance of the price, type 2.
Mm-hmm. So we have one leg here. We got
Yeah.
type 2 ISP.
And then breaking below, so we can technically say this is ISP.
Yeah, exactly. So I keep moving the chart on you.
It's okay.
So we have that break here because body closure, right?
Yeah.
Pushes down. And now we have a new leg in development, right?
Exactly.
Yeah, so same one, same leg. This is pushed down. This is not really anything too significant here, but practically this might be something going on, right? Okay, we're just going to continue down, but let's see here. So we've had this, we've rebalanced, pushed out. This is where you have to build a lot of context in on the lower time frames, right, as well. But you can see that we've had that ISP, and then we've then held it by, you know, we've not come above here, and this is just still following that order flow. And then this leg is still in development. Okay, we've taken liquidity, and we've broken this one. We don't have context of what's actually going on the left here, so I'll be patient. For assuming that this is an SMB, I'll wait for another confirmation. So I'd like to see that this actually gives, right? So that this is the start of an uptrend. Okay, so now what do we see, right? So we have this first one. Break, you know, we don't have enough context because I don't know what kind of area we're in. Maybe we're in higher time frame liquidity, maybe we're not, but for the sake of it, when you don't know, don't assume, right? We've then broke this here, right? So this was not even a body break, so it doesn't count. This one is a body break. What caused this body break? Yes.
This candle below.
This one. Okay. Beat you to it this time. Okay, so continue on. What is our leg currently? From here to here. This should hold, at least temporarily. It doesn't. Okay, so we're shifted back bearish, right? Broken down. What caused it to break? There we go. So this becomes your high. This is your leg, your current leg. Let's see how this continues, right? So this, all this right here, is this still sub, or is this more institutional structure? Anybody?
I would say that this is sub because we didn't close above this candle, so we just keep continuing down.
100%. So we just keep assuming that this is all part of the same structure. Okay. Okay, so the obvious thing to look for is up in here. So even this break here, is this sub or is this institutional?
I think that's
pushed up.
still sub.
Still sub, right? So what is our bias? Bearish or bullish?
It's bearish right now.
Correct.
That was an
Okay.
ISP in the making.
Yeah. So this one here, we've had a sweep and then break down. Still a little confusing for me, right? Because we have equals here, right? It's just like internal range stuff, right? This is like substructure acting. So I would personally just look at this whole leg. Because I believe that we can still come up into here. Okay, there it is, right? So this is still the bearish leg, right? So we're still bearish at this point. Okay, so we have this up to here.
But like,
Okay.
still, wouldn't you count it like as an ISP because it's like swept liquidity right here? Even
Yeah.
like if it is an equal highs, it
So
still counts as an ISP.
you can, but what I would do is I would frame it out on a different time frame, right? So like
Yeah,
I would be looking
exactly.
at it on like the 1 hour, right? But on the 4 hour for me right now, this is not this
Yeah.
is nothing of interest, right? If I go down to the 1 hour. If I go into the 1 hour, you can clearly see like a sweep that pushes down and then we break and shift. And you can build your trade idea off the 1 hour, right?
Yep.
Okay, what the there we go.
Just like in the context of breaking, we can still like count it as an ISP because it's broken. We shifted like bullish.
For sure.
But like I get it, like we don't want to trade it from it because we equal highs and stuff. But still we shifted to bullish, right?
Yeah, 100%, 100%. And you'd build context around multiple time frames, right? Like we're only doing one time frame right now, so it's rigid.
Yeah, I got you.
Right.
Yeah,
When you have context of like, okay, what's to the left here? Is this higher time frame liquidity? We've now had a push out. Does it make sense that we can have a start of a pullback, right? So you have to build context around it. But right now we're strictly just looking at it as mechanically as we can. Right. So this broke. What caused this to break? Brian, this one's on you. Okay. Let's I don't know, maybe see what you guys think.
I mean, I got it, but like I don't want to answer.
Brian?
Yeah.
So generally what I like to do, is just follow the whole leg up and see, how the ISP is formed, and then just go and try and find the most recent one.
Okay. Okay. Stop. Here.
Yeah, actually,
So,
you're right.
Yeah.
So we have 1, we have 2, we have 3. This breaks up, rebalances 4, which breaks, right? So this is the most recent one. This is continuing that order flow, right? So this is the most recent one. If we then push below this, then we can start to prepare like bearish trade ideas. Let's see here. Okay, so push down.
Oh wait, by the way, this is our swing, right? On the left.
SMB. This where here?
Yeah. Yeah.
We have lower. We have this doesn't break structure, right? Nothing here breaks structure, so this is not.
Okay. Yeah.
Right. At least on this time frame, right? So our swing structure is still up all the way up here.
Yeah. Gotcha.
Yeah. Okay. Pushes down.
But can we say that this is then swing low? Since we have
This is definitely
ISP.
swing low. Because we have sweep that breaks structure right here. We have ISP on the right, higher ISP on the left, right? So this is automatically a swing point. And you can see generally it's highest low, highest high, lowest low, highest high, lowest low, highest high, lowest low. But when we see, like I was mentioning earlier, sometimes you get that choppy price action, and this helps you to map it out times like that. Okay, so we had SMB. what is the ISP that caused the SMB? Whoever wants to answer.
This one?
Okay. Yes and yes. Both are yes. But Brian, you're correct, right? Because this is the most recent one. Okay. Why is that? Because we filled imbalance right in here.
So
Holy
we are
shit.
always watching the recent one, right?
You're
the
always
break
watching the
structure?
recent one. Yeah.
Okay.
Always watching the recent one.
That's a
So-
lot of trades just following the ISP. That's literally a lot of trades.
Yeah. You can trade. You don't need more than I've only monitor 4 pairs now.
Yeah, yeah.
Right. And
not
there you go.
easier.
There, that's a trade right there you could have gotten, right? So we can highlight the POI. Right. Look for fractal confirmations, target that low because you understand that it's continuation of order flow. So realistically, all that we're following here is order flow because structure doesn't really exist. There's not really anything like structure isn't really a thing, right? Order flow is how these like banks and financial institutions are booking, right? And we're seeing that represented on the chart. Okay, so we've had this push down again. We're looking for that break, right? That body break. Didn't get one here. We wicked below it, so now we have to move it down to here. Okay, so this is unconfirmed, by the way, but there's definitely a trade in here that would have been profitable. But still unconfirmed. So our high is still up to here. Okay, well, oh, there we go. Right. So you have trade in here, you potentially have some trades in here, right? And you can see
100%.
you can see fractally, we've had like
Yeah,
that little sweep
Like the
here.
choppy price. Yeah, yeah.
Yeah,
Sweep
We've-
break, sweep break.
had that sweep break, like fractally, there's probably a trade
3 trades
somewhere in
actually.
here, right?
I just saw
And-
3 trades.
Yeah, right. So if I go down
Yeah.
to 1 hour. Okay, so we have this overall leg here.
There's
Right.
an
So
imbalance.
let's push down. Let's just follow this here on the 1 hour. So we have ISP breaks. This one, what caused this break of structure?
Yeah,
Christian.
And this too, by the way.
Yeah, wait. Christian,
Yes.
what
Yes.
caused this? So yeah, we can map this one out too, right?
Yep.
So let's just follow here to here. What caused this break of structure here?
This one.
Beautiful, right?
Fair,
So
yeah.
we have that imbalance. So what does that give us? The most recent ISP, right?
Correct.
So would it be fair if we're understanding how order flow works now, would it be fair to set a limit on this level here? Stop above?
Yes, that looks pretty fair to me.
Yeah, 100%, right?
Maybe about this, yeah.
Yeah, probably
And
above
then I
that
would
just for the
target-
liquidity.
Target this one.
Yeah, at the
That's
very
low.
least, you can target this, right? And this is just entering using the trading plan just on the 1 hour, right? And the 1 hour, you're able to receive 5R already. And then if you really want to go, you can target this swing point, right? And you're at 20R with just a 1 hour entry, right? So
So
of course, yeah, what's up?
quick question. Would this also now be a swing point here? Because you have 1 and 2.
Absolutely. So you have the new swing in development, right? So now we can assume
Gotcha.
that we're starting the beginning of a new swing leg. And what do we know about bearish or bullish legs? When we're in a bearish leg, usually you have corrective retracements and impulsive moves, right? Impulsive or impulses, right? Corrective retracements, impulsive moves, continuations in the direction, right? So we can assume that markets develop like this, right? So we can assume that this leg is big, right? And that's where building a trade idea comes really into play here with, how hard do you want to push with your RR and stuff. Like I personally like to trade like 5 or 6R, but there are opportunities and they do come where you can get like a 20R trade and stuff like that, right? And if you really want to confirm this on a lower time frame, you might be able to get like a 100R trade here. You know what I mean? Just not my cup of tea, but that might be something that you're interested in testing out.
How many
Yeah.
trades a week are you taking with this?
That's a good question. So I take lately Well, this month hasn't been that good because there's a lot of the trade ideas have been on London, but I'm not up. But generally, it's 2 to 3 trades a week.
It's not bad. That's
Yeah,
all you need.
that's all you need, man.
He's rich
100%.
as fuck.
100%. That's all you need is 2 to 3 trades a week, and that's me missing plenty of the trades, right?
And what are the
That's
four
true.
pairs you said you trade?
I trade
Obviously,
just
G2.
yeah, I trade just the majors: EU, GU, AU, and UCAD.
Cool. All right.
Yeah. And then I'll teach you guys a little bit about something else about correlations and stuff, which
With DXY?
with DXY and with majors
Yeah.
together, right? So quick tip, if there's a lack of a correlation across the majors, don't trade the majors. That usually means that USD is range bound, and it's usually creates a really choppy, shitty market. So when that happens, then I'll look at like GJ, EJ, but that's far and few between. Yeah, so you guys actually are doing really good. It sounds like you guys have everything a pretty good grasp on this, which is amazing how it's only been 2 days. Is there any questions, guys?
Well, we have a good teacher, so
I got good
Actually, true.
students, man. I got good clients here. You guys are awesome.
Can you take the screen to something that'd be worth a screenshot so I can add it to my Notion? So I can have some notes.
Sure. Where I can, you know what I can do actually is I can share this whole chart with you.
All right. Oh,
So
can
we'll-
you?
Yeah, because this I
Yeah,
have this
you do.
saved as my trading for live. So I'll just how do I do this now? Sharing? Copy link. Okay, so I'm gonna drop this in the Discord and let me
Oh,
know
shit.
if you can
maybe
open
in the
that.
Notion, yeah,
I'll do it in Notions. Yeah, in the Notion section.
insights
Nice.
or yeah.
Okay, so make sure that you duplicate it because eventually, like at our next session, I'm gonna have to delete the chart. Tell me if that works.
Yeah.
Yeah. Okay, so I'll leave that up there for a couple days and then I'll end up deleting it on Friday.
Yeah, it's good for me.
Awesome. Okay, yeah. Any questions, guys? Anything that you were struggling with in particular overall, like any weak points that we can maybe talk about right now?
At the moment, for me, not.
No, I'll have to go through it myself to make sure I really get it, but
Yeah, for sure. Brian, now with the
And-
new information and Bobbin, because I know you guys sent me a chart, I want you guys to do it again. I'm gonna assign homework later today about doing this process.
Yeah.
For honestly, the homework is do any piece of price action, but I have one specifically that I just have to go and find and I'll put it in the chart and then I'll post my answer to it at the end of the day.
nice.
Yeah.
Sorry to interrupt you. Can you just take a screenshot of this text that you write, 2 types of ISP, 3-tier structure, because I cannot copy that in.
Sure. I'll make a
Thanks.
thread attached to that link there.
I feel like I missed a proper session, man.
Yo, what's up, man? Is that Paul?
Yeah, it's me.
Were you in here the whole time?
No, man, I just got in. I just got
Oh
in.
yeah, dude. This is we've been going at it for quite some time.
Damn, man.
Like a damn hour and a half.
Do you start
But
at
this-
9?
Yeah, we started at 7:30. It's 9 right now.
Well, sorry,
uh,
9 my time.
What? It's 9? What?
Sorry.
Yeah.
What
Yeah,
the
it's 11
fuck?
PM my time.
I didn't
now.
feel the time. What the fuck?
Yeah. So you could do this for hours, man. I did this for years worth of data. So just
Holy
expand
shit.
on that. Anything else, guys? Any questions in particular for any of you guys? Christian? You good, Christian?
All good, man.
Alrighty, so I think that's everybody, right? Everybody's good?
Yes, do you have any questions?
Yeah. No, I don't, man. All right, I'll see you guys in the chat, yeah?
Yeah,
All right. Thanks,
Alright,
man.
cheers,
Thank
guys.
you.
No
Thank you for
problem.
the
Yeah,
session.
sounds good. Bye.
Bye.
Have
Bye.
a nice day.
You too.